What's going on, everybody? In the premium, this is more of a. It's fucking cold in here. Let me put a sweatshirt on. This is going to be a technical analysis video on how I find my key levels and how I predict my trades before they even happen. So, as I've said a lot recently, I try to predict the trades before they ever even happen. And, you know, there's a difference between predicting where the market's going to go and predicting what trade you're going to take. There's a big difference. So let's get into that, right? So let's replay yesterday, because today was FOMC. Today fucking sucked. Let's replay yesterday and go through my game plan. So what I'm always going to do to find key levels to reverse off of and predict and stuff like that is I'm going to go on the daily, 4-hour, and 1 hour, and sometimes even 15-minute and 30 charts right before, right before market open, around 9:15. So when I drop my daily bias for you guys, see how they're all at around the same time? 9:23, 9:24, 9:22, 9:19, 9:21, all at the same time, because right before that is when I get on and I do my shit. I check what's going on. So I am immediately, before the day starts at 9:15, going to go on the daily, 4-hour, hourly, and mark out some highs and lows that I think are quite important. So first things first, that's catching my eyes on the daily right now, is these equal highs above. Let's go to the 4-hour chart, right? Now, how about this? We have this high here that we've already hit before the market even opened, I believe. We have this 4-hour fair value gap here. And we have London and Asia lows, London and Asia highs. And I'm going to do this on both assets. So we have this high up here on the 4-hour. We have a 4-hour gap that has already been tapped into with London. So London low is there. I have this indicator that shows ICT kill zones and pivots. And then this one as well, ICT customizable 50% line. Those will show like my session highs and lows. But basically what I'm doing is I'm marking out all like hourly, 4-hour, daily highs and lows and for value gaps that are nearby that I think price will draw to as targets and price will draw to as places that we're going to respect or inverse. So that's the first step. Let's just draw out all that shit, all right? What else is there? Oh, okay. If we go down to the hourly, we have an hourly for value gap that overlaps, all right? That's pretty cool. Same thing here. We have, this hourly gap. We have London low. We have another hourly gap below here on ES. Just going one by one here. Let's go to the 30-minute, see if there's anything of value. Nothing crazy. We have London, the gaps that we've been discussing. So, yeah, nothing insane. 15-minute, probably no gaps anywhere. Yeah, we have equal lows at London, so immediately I'm thinking we're going to hit London right off open, right? So, let's see what happens. Off open. Boom, we hit London, and we get a reaction off London. This was the trade, like the 15-second trade that you could have taken. We're just going to fade that for simplicity because, yes, this is an A-plus setup, but, I mean, that's a very quick trade that probably not many of you are going to be able to catch. So let's just go a little bit deeper here. So we tapped the 4-hour gap and the hourly gap and swept London. What I'm going to do right before 9:30 is I'm going to say to myself, okay, now we have everything drawn out. We have London low below. We have a 4-hour and an hourly gap below. We have daily equal highs above. So what am I thinking here? I'm thinking, well, let's go on the 15 and the 30 and the hourly. What are we doing in the last couple hours? What did we do here? We're making an uptrend. What did we do on the 30-minute? We're inversing fair value gaps. All right, so we're not inversing, like bullish fair value gaps to the downside or anything like that. We look like we're in an uptrend. So we're pretty bullish on the higher time frames. So obviously, I want to predict what's going to happen if we react to each of these things. So I have marked out important highs, important lows, and important gaps nearby on both assets. Now here's what I say to myself. Okay, what am I looking for? I'm looking for us to respect these gaps and get our longs to these highs. Pretty obvious, right? So if we sell off at open, I want to get a reversal out of these gaps off London so we could target these highs. If we pump at open, I want to see a sweep of these highs and then a reaction off of that. Or if we keep on pumping, this is the big thing, I usually am marking these out for reversal points. These key levels are reversal points. I want to see a reversal off the gap, or I want to see a reversal off the highs. But if we don't reverse and we have one of those days where we just shoot down through the gap, then I'm going to want what? My regular continuation strat that I always teach you guys. We wait for a 5 or a 15 minute to open up. We retrace into it. We get an internal SMT. We get an inverse, and we just take it 1-to-1 out of the gap. Works almost every fucking time. Very money. And it's the same thing with this. If we displace through these highs, we start taking out all these highs and we move above it and close above it, then we could look for the same, a continuation trade to that way. So what I'm doing is I'm marking out important highs, lows, and gaps, and I'm like, all right, I want to see us reverse, or if we disrespect them, I'll just look for continuations. That's it. That's all I do. And you know what else I say? I say I'm not going to take a trade unless we hit one of these things. And that has gone with every single one of my trades. If you go through, like today, with my L on eval today, was waiting for this all morning. We finally sold off to a 4-hour gap. I didn't take a single trade in all this chop until we finally hit my 4-hour gap. The day before, which is, I guess this, funny enough. I wanted that 4-hour to get hit, and it did right at open. I probably shouldn't even use this one because I'm about to show you. This day sucked. This is the, like, choppy break-even one. Look at this. 30-minute respect and SMT at open. This is exactly the trade that I wanted. This first trade was so money because I marked out a 30-minute. And what did I say? I said, listen, if we could come down at open and respect this 30-minute with an SMT, then I'm going to want to long out of it. If we were to have instead displaced through and under this 30-minute, then I would have been like, fuck, okay, we're disrespecting the 30, we're flipping bearish, I'm going to wait for a continuation setup to continue going to the downside. See what I mean? These key levels are very, very key for trying to find reversals, and that's why I do them 9:15, because it's the perfect amount of time where it's so close to open that not much more is going to happen, and I am able to get a full picture of what has happened in the last, 12 hours or whatever the fuck it may be. And it's, like I said, it's close enough to open that then I get to see it react and happen in full time. I have a full picture, everything like that, and I can react based on what open gives us. So I'm always going to be marking out key highs and lows because, remember, I said to you guys, if you go through my checklist, rejection out of higher time frame PD array, so a liquidity sweep or a fair value gap. So why wouldn't I want to then mark out important higher time frame gaps, highs, and lows, right? Because I want to see how it reacts. So this open trade happens. What happens next? We go further down. We're still bouncing out of this hourly here. And then what else happens? We have this other unfilled hourly gap below, right? So as we continue to sell off through this gap, I'm like, damn, we ain't getting shit out here, right? So I wanted to see us react off of the 4-hour gap or off of the hourly gap or something like that. And that's why I'm marking out all of these liquidity pools, because what does it mean when we react? Remember when I tell you guys I want to see a V-shape, I want to see momentum? I made a video in the premium, and I said to you guys, it's this video, I'll show you. Definitely watch this one. A hedge fund CEO gave me these 3 confirmations, and it was volume or volatility, momentum, and fucking, dude, I'm blanking, correlation. So with that momentum, that's why I always tell you guys, what shape is the inverse? It's a V. We go to my trade journal. What shape is this inverse? It's a V. What shape is this inverse? It's a V. What shape is this inverse? Immediate V. Inverse, V. V. It is not a fucking W where I'm chopping around the gap. It's I'm coming out at a level, I'm immediately displacing up above the gap, and then I'm fucking mooning, you know what I mean? And vice versa with shorts. So that's how it's supposed to look. That's why, listen, I mark out this hourly fair value gap, so let's just get all the other fair value gaps out of the way right now. And just look at the hourly by itself. We have an hourly fair value gap. Do we have an SMT? Yes, we do, externally. So a lot of people think that, like, they're like, wow, how did you spot that SMT? The truth is, I just wait for one of these gaps to get hit, and then I'm like, okay, you see how the dotted line is down on this gap? If you look over at ES, this gap hasn't been hit yet. So there's an SMT because the gap got hit on this, but not on that. So the low of that candle got hit on one. So I really only look for external SMTs as soon as the key level that I drew out has been hit and it's getting reacted to. Because then I can be like, okay, cool, added confirmation. So now you get the external SMT off that level, and now you're looking for a fucking inverse. I forget if I took a 30 second or a 1 minute. It was probably the 1 minute. Yeah, it was the 1 minute. Yep, get the close on the 1 minute. Yeah, this is what I ended up taking. To like the unfilled 5 or some shit. Yeah. So, obviously a W because I'm goated. But here's my thing. I marked out these gaps. You know, I actually forgot to mark this hourly for you guys on this video, but it's cool. I marked out this hourly, and I said, I want to see us come down and react off a gap and then pump up. And I tell you guys this, if you're in the premium or if you're in the free, I'm basically giving away what trade I'm going to take every single morning. So even when I'm not trading live, today I said, we're inversing a lot of higher time frame gaps. If we can get a retrace to that unfilled 4-hour to open and respect it, I'll probably look for quick longs. What was the trade I took today? Respected the 4-hour quick long. You look at the 127. We currently edge a daily high. We have an unfilled 4-hour below that I want to take and respect that open. If we could get longs out of there, what do? We go through the 4-hour a bit, tap the hourly right below it, while still inside of the 4-hour, tap the hourly right below it, get our V-shape, get our long. So I'm actually kind of telling you guys the key levels that I'm looking for reversals off of. So let's just focus on reversals right now. I'm going to draw out those highs and lows and those gaps at 9:15, see what I want to do, and then a continuation would just come from, okay, did we make a 5 or a 15 minute? So like, for example, this. Now let's bring this back. Okay, we opened up a 5 minute. Now, will we get an internal SMT? Yeah, we got an SMT with like this low down here or some shit. So we get an SMT coming out of the fucking 5 minute with a 30-second inverse. Stop loss at the low of the SMT. 1-to-1, just take it to a new high. Boom, it works. So the way that works is, I told you guys, okay, if we're now establishing a trend, then you just look for, instead of key levels, you're going to wait for a 5 minute or 15 minute to open up. So that is how I predict my setups before they even happen. I'm not predicting where the market's going to go. I'm not entering a short and saying, well, we have to hit the unfilled 4-hour, right? That would be the difference. That would be predicting the setup. That would be me forcing a trade to happen just because I want to see it happen. The way that I'm actually predicting is it's like, think of levels trading. You guys know levels trading where guys will set levels and they'll try to like top or bottom tick the market. Think of it kind of like that, where I'm setting these levels of importance and I'm like, I want to see reversals off of this. And if we don't get a reversal and we displace, then I can know what the trend is either way. So if I have an unfilled hourly gap here and we respect it, then I can look for a long out of it. And if we disrespect it, I can assume order flow is probably flipping bearish and I can look for, instead, continuation shorts to continue to the downside. That's how I predict my shit. That's how I draw my levels. 9:15, you look for those relevant daily, 4-hour, hourly, 30-minute, 15-minute gaps, highs, lows, and then you just get used to it. Like my 30-minute trade off open the other day, this shit I think it was. Was this it? No, it was this one. The 30-minute trade right off open, like, you just go to the 30-minute. If there's a gap below and we make an SMT and you tap it, you get a V-shape like this. Like, that's fucking bread. That's literally bread. Like, dead ass. That is bread. So, yeah, after a bit of time, you're just going to get more used to it. But like I said, guys, I'm telling you in the daily bias every day what I'm looking to do. So that's how you go about it, right? So, yeah, that's how I draw my key levels. Hopefully that helped you guys, and I'll catch you later.